Good morning everyone and welcome to Morning Markets from True Potential. Today we'll start by looking at yesterday's equity market performance and then I will look at an interesting trend that's been developing within the bond market. Yesterday, equity market returns were basically flat. The S&P 500 in the US closed down 0.2%, but did nearly touch its all-time high yesterday. The Nasdaq, it was also down 0.1%. The FTSE 100 was also down 0.2%. The Euro Stoxx was almost flat, whilst in Japan overnight they closed up 0.3%. In currency markets, very little movement. We saw a little bit of strength within the dollar and a little bit of weakness in sterling. But it was in the bond markets where we've seen some really interesting developments. This week we've seen bond yields have actually continued to fall. Yesterday we saw the US 10-year government bond yield fall from 1.53% to 1.48%. Good news really for bond investors because as bond yields fall, prices actually rise. Here you can see the chart of the US 10-year government bond yield, which is in the blue line, the single most important bond investors monitor. Why? Because it offers an insight into the market's expectations for future economic growth and inflation. We can see bond yields have been falling since the end of 2018 as interest rates fell, which is in the red line, particularly in February and March last year as the Federal Reserve looked to stimulate economic activity as the coronavirus pandemic took hold. Supportive measures from the central bank and the government helped the US economy get back on its feet, which led to bond yields stabilizing and actually started rising again. The US government has looked to turbocharge the recovery with more government spending, and consequently bond yields have accelerated in February and March this year due to higher expectations of growth but also inflation. What we're seeing now is bond yields actually falling again, now at a 3-month low. The question is why? It's not because of concerns about future economic growth. The US economy is shifting up into top gear with restrictions now lifted. It's actually the market's view on inflation. Inflation expectations have actually started to fall. Why? Well, it's very difficult to attribute it to just one reason. There are perhaps several reasons. Firstly, the market may have got a little bit carried away and overconfident with the direction of inflation. Employment data released last week was weaker than expected, so perhaps the Federal Reserve may keep interest rates lower for longer. The US infrastructure package is battling to pass through Congress, and we've also heard from a number of Fed officials in recent weeks who have been very consistent in their messaging that price pressures will be transitory. Today we'll see if this trend is justified and where the market really stands on inflation as we get the latest US inflation reading at 1:30 p.m. today. Thank you for listening and we'll see you again tomorrow.
Subscribing to True Potential YouTube channel is quick and easy. Simply go to your YouTube app on your phone, type in True Potential and press the red subscribe option. You'll then be notified as and when new videos are released.